Hello everyone, how are you all doing out there? I'm Kate Hill, bringing you the best unbiased, honest content on property, along with fantastic hints and tips. Today, let's hear a little bit about how interest rates might shape the Australian property investments in 2025. So, whether we like it or not, interest rates have long been a pivotal factor in shaping property markets, influencing borrowing costs and buyer demand. Yet, their impact on property prices isn't always straightforward. In some cases, broader economic factors such as population growth, employment levels, housing supply significantly overshadow the role of an interest rate. For instance, strong demand in high growth areas may drive price appreciation even when borrowing becomes more expensive. This duality is what makes the relationship between interest rates and property markets complex and intriguing. As we look ahead to 2025, property investors must consider not just the potential direction of interest rates, but also the economic context that surrounds them. Whether you're looking to invest in perhaps a positive cash flow property, good luck with that, or pinpoint the best suburbs for property investment in 25, understanding how interest rates intersect with other market drivers is key. Interest rates directly impact borrowing power, of course. When rates are high, mortgage repayments increase, reducing the amount people can afford to borrow. Conversely, lower interest rates make borrowing cheaper, typically encouraging more buyers into the market. For property investors, this dynamic is crucial because it affects not just your financing costs, but also overall buyer demand. In 2025, interest rate changes could go either way. Some experts predict potential rate cuts to stimulate the economy, while others foresee rates holding steady amid persistent inflation concerns. A reduction in interest rates would likely lower the barriers for first-time buyers and investors alike, boosting demand for properties in sought-after areas. This could particularly benefit investors targeting real estate market trends in 25 in cities like Brisbane and Adelaide, where affordability aligns well with economic growth. But higher interest rates might create opportunities for astute investors. A subdued buyer market can lead to price corrections, providing better entry points for long-term investors. Those prepared to adapt their strategies, such as focusing on perhaps positive cash flow or neutral cash flow properties, could find opportunities even when borrowing costs rise. While interest rates are important, other economic factors often have an outsized influence on property markets. For example, Australia's population growth is projected to remain robust, driven by immigration. This will increase demand for housing in areas experiencing supply shortages like Melbourne's outer suburbs and Sydney's fringe regions. Employment levels and wage growth also play pivotal roles. High employment can drive demand for housing, especially in cities with strong infrastructure and job opportunities. For investors targeting areas experiencing economic expansion, like emerging regional hubs, it could be as important as monitoring rate movements. Additionally, government policies on housing affordability and infrastructure development can either amplify or counteract the effects of interest rates. Tax incentives for investors, zoning reforms, first home buyer schemes can sustain demand even in a high rate environment. The interplay of interest rates and economic factors creates a balancing act for property prices. If rates are cut in 25, it could reignite competition in key markets. There's already a lot of competition, but it will drive up property values. Investors focusing on the best suburbs for property investment in 25 might find themselves competing in high demand areas with limited stock. We have already been seeing that. On the other hand, if rates remain elevated, prices could plateau or maybe decline in some markets. This presents a real opportunity for good and savvy investors to negotiate a better deal, explore regional areas offering stronger yields, like cities with lower entry prices, high rental demand, like Adelaide, maybe even Tasmania still. They could continue to attract those wondering how to start investing in property with a more conservative budget. To navigate 25 effectively, investors must remain agile and well-informed. Interest rate fluctuations can change the dynamic of affordability and demand, but broader market trends often create enduring opportunities. So for instance, regions with infrastructure projects, population growth will likely outperform regardless of rate conditions. Investors should also consider cash flow strategies to mitigate risks associated with rate increases. Diversifying into more neutral and positive cash flow properties, not at the expense of capital growth, can provide a buffer against higher borrowing costs while still capitalizing on rental demand. Additionally, understanding real estate market trends for 2025 will help investors identify areas poised for long-term growth. Interest rates will undoubtedly influence our Australian property market investment in 2025, but their impact has to be understood within a broader economic context. While rate cuts could spark renewed demand and price growth, elevated rates may offer unique opportunities for strategic investors to enter high potential markets. The key is to balance caution with calculated risk. Stay informed about the rate movements, but don't lose sight of the overarching market drivers like population growth, employment, housing supply, infrastructure projects. When you do that, you can position yourself for success, whether you're targeting better cash flow properties or looking for the best suburbs for property investment in 2025. Really smart property investment is not really about reacting to short-term changes, but about aligning your strategy with the longer-term trends. So take the time to research, plan, and adapt, and 2025 could be a transformative year for you. I will keep you posted, of course, throughout the year about our Australian property markets. Hit like and subscribe if you're enjoying the free content, and I will see you all soon. Bye.